Greetings to everyone. Hope you are all good. Yeah. So, Rachel here again, or Nehemiah here again. And today we will be talking about taxation tutorial set 4. Fine. For this one, I've pre-solved everything and I'm just going to explain how I arrived at the answers. Mind you that these questions are plenty. If I'm to solve them one by one, I'm sure I can use like 4 hours and I'll not be done. Because if you join tutorial session, the TA is going to use like 2 hours to solve only question one. So you can just imagine. It's better I solve and then I come in and explain. Right. So first of all, if you have not liked this video, kindly like this video fast, and then also subscribe to the channel for more if you haven't. All right, so let's start. So question one, Mr. Antington, physically challenged. So you can also change the speed to either 1.5 or 2 to suit you. Because this session is likely going to keep long. Mr. Antington, physically challenged, was employed as a chief accountant of Nagode Limited on 1st April 2020 on an annual basic salary of 60,000 by 10,000, and it has a maximum of 100,000. What this means is that in the beginning, he's going to be paid 60,000, and each and every year he's going to be like his salary, basic salary is going to be increased by 10,000, and it will be increased by 10,000 until it will reach 100,000 mark, right? So meaning that he was employed 1st April 2020 to 1st April 2021. He is going to now receive 70,000. 1st April 2020 is going to now receive 80,000. That's what it is there. So he was entitled to the following monthly allowances and benefits. He's entitled to responsibility allowance here, first professional allowance here, house help allowance here, utilities, and then overtime is also here, right? And then they also provide that him with furnished accommodation, which he pays 5% of his basic salary. Then they also provided him with vehicle and fuel, right, for both official and private use. And he was also provided with a bonus payment of 25% of his basic salary. And his returns was submitted to the Ghana Revenue Authority for the 2022 year of assessment. He is married with 3 children, 2 of them who are in approved senior high schools in Ghana. The third one in is at the University of South Africa. So basically, since the third one is outside Ghana, it's not part, or he or she is not part, and he also contributes 5.5% of his basic salary to the mandatory pension scheme, and an additional 10% of his basic salary to a voluntary pension scheme approved by the National Pension Regulatory Authority. He earned interest of 4,000 on his savings account with the Tema branch of Kelma Bank. He also received a net dividend of 20,480 from his investment with Enoga Securities. Now, they are telling us to compute the chargeable income of Mr. Antington for the year 2022. So for the year of assessment 2022, the chargeable income, right? So that's what we are coming to compute here. So this chargeable income is going to be from employment, right? So the chargeable income from employment is going to be, remember, um, he was employed on 1st April 2020, right? So now for his 2020 year of assessment, right? We are going to have um, first April 2020, right, up to the next year, right? So let me just do this page like that. All right. So let me just do this page here. Right. So basically, we are going to do this in the year 2022. We are doing this thing for him in the year 2022, right? So first April 2021, the salary is going to be increased to 70,000, sorry, in the year 21. Then first April in the year 22, his salary is going to be increased to 80,000. That's for 22. Right. So now we have to detect or apportion how much he's supposed to earn in 21 and in 22. Then we add it. Right. So 21 year of assessment is going to be from 1st April 21 up to 31st March 22. Then that salary is for 70,000. So when we count the months within it, we are going to get 3 months for the year 2022 in that, right? We are going to get from 1st January 2022 to 2nd January 2022 to 1st January. We are going to get January, first month, then February, second month, and then March, third month. So we are going to get 70,000 times 3/12. That's what we have here. Then for the year 2022, for the 2022 year of assessment, this is what we are going to get. We are going to get from 1st April 22, right, up to 30th March 23. And then the salary is what, 8,000, right? So when we count from April up to December, we are going to get 9 months in that year. That's why we are having 9 year over 12. So it's 80,000 times 9/12. So the first one we get this, then now the second one to get this. Where we add or we are going to get his basic salary. Right. So this is the estimated basic salary. Right. Then now we come and then add all cash allowances. Now allowances here. Remember, these allowances are what? On monthly basis. So if you want to get it in an annual basis, you have to multiply them by 12. That's why the responsibility allowance is multiplied by 12. This one multiplied by 12. This one multiplied by 12. utilities multiplied by 12, right? So we add all of them. These are all cash allowances. So we add all of them. We add it to our basic salary, right? Then we can add other cash benefits. So the other cash benefits we have here is bonus payment, right? So bonus payment here is, they told us that the bonus payment is amounting to 25% of his salary, right? But the law says that if the bonus payment is more than, if the bonus payment is 15% or less than 15%, then we are only to charge what? 5% final tax on it. And with that one, we are not adding it back to the we are not adding it back to the chargeable income. So let me see if I can see that here. So this is it, right? So up to 15% is having what? A final tax. But any bonus that exceeds 15% will have what? Will be added to the chargeable income to be applied by the personal tax rate, right? So that's the same thing we are going to do here, right? So now the bonus is what? Based on 25% of the basic salary, right? So it's either we can just take 15% out of the 25%, then it will be left with what? 10%. So we can just say 10, go back to this, right? All right, so here we can just write either 25 minus 15, which will be left with what? 10, right? Because the 15% will be charged as what? A final tax. So it will not be, it is not supposed to be added here, right? But because of ticks, you can also do it like this. So here you can just get the 10% times the basic salary, right? 77500. Then you are going to get 7750, right? You are going to get the same thing. Or you are going to find 20%, 25% of the 77500. Then you are going to less 15% of that. So you're also going to find 15% of the 7750, so 77,500. Then you less it. You less it from the bonus payment, then you are going to arrive at the same thing. So you can use two formulas. Either you just subtract the tax on the overtime straight away and then do it, or you can use this format. They are all the same, right? So remember that the law says that anything that is less than 15%, we only charge a final 5% tax on it. That is 5% tax on it. But in case it is more than 5%, then the difference will be added to our chargeable income so that we can apply our personal tax rate on it. All right, so let's move on. Now, we come, after doing everything, we add our overtime. Overtime is what? 6,000 per month. So times 12 is giving us this. Now we move on by what? Adding an indirect cash payment. Always know that the social security fund that the employer is going to pay on your behalf is always an indirect cash payment. So it's always supposed to be appearing in your cash or in the computation of your total cash emolument. Always include, even though later you take it out, but always include it, right? So that's it here, 13%. It's always 13% times the basic salary. We are going to get of 10,075, right? 10,075. Now, when we add everything, our total cash from employment is going to give us 448,125. Then we add other cash benefits, right? We have other cash benefits here, which was either accommodation, right? So like yeah, we had accommodation here. Where is it? So he was provided with a furnished accommodation, which furnished accommodation attracts a rate of 10%, right? So furnished accommodation, furnished accommodation attracts a rate of what? 10%, right? So we apply the 10% on our total cash, right? Then we get this because it's always on total cash emolument. So we find the 10% of it. Then our rent to remember that the question said, you know, sorry. Remember the question said that he pays 5% of it always. Right? He has already been paying 5% of the rent already. So you subtract that 5% from it. So he pays off from his basic salary, right? So 5% from his basic salary is going to give us this. Then we are going to less it and then get this. If we less it, then we get that. Right. All right. So now you end up getting a total here. Now let's move on to having another this here, which is vehicle. A vehicle was what? Fueled by the employer, right? A vehicle and then a fuel also attracts a rate of what 10%, but it is restricted, right? So when you calculate and then your actual figure is less than the restriction figure, then you use the actual figure. But if in case it is higher, then you use the restriction figure, right? So basically, when you calculate 10% from your total cash emolument, you are going to get this, right? But the restriction is that it is not supposed to be more than 5%. Sorry, 500 cedis per month. Where is it? So vehicle with poor is not supposed to be more than 500 cedis per month, right? So that's the same thing we do here. Then we are going to arrive at what? 6,000. But we can see that the 6,000 is lesser than the actual 10% one. So we are going to use the 6,000, right? So we carry the 6,000 and now we add everything. Then we get our qualifying employment income. Then we less any deductions, right? So here we less our provident fund, right? In the question, it told us that they told us that he contributes 5% of his basic salary, 5.5%. We take it out, right? From his basic salary, we take it out, we bring it here, right? Then he also contribute 10%. We also bring it here, right? The employer, remember I told you that even though it will be embedded at the top there that you are going to add it to your indirect cash benefit, you are also going to take it out. So the employer is going to pay that 13%. So you also bring it here and take it out again. Then you have marriage allowance, which is capped at 1,200. Then the child allowance is also what? 600 cedis per one child. Here you are having three children, but one is schooling outside, not in Ghana. If they were all to be schooling in Ghana, then it would have been applied to all of them. But since it's only two that are schooling in Ghana, we only apply it on them. So it is 600 per child, right? And then it is two, and the maximum is three children, right? So here we have two, and then 600 times two is giving us 1,200. Now you also remember that Mr. Antington is what? A physically challenged person. So he's going to get what a disability allowance. So the disability allowance is what I'm talking about here, right? And the disability allowance is of 25% of his qualifying employment income. So that's the same thing, disability allowance of this, and we are getting this, right? And then once we sum up everything here, we are going to get this. Remember, we are lessing whatever is here. So this is going to be in a bracket, right? And then we are going to get a total chargeable income of this 146,809.37, right? So that is it for question one. If you have any further question, you can drop it in the comment section, then I explain it further. All right, let's quickly move on to see. Yeah, so that's it. We didn't treat the interest on savings, and then this year we are talking about employment income, right? So now let's move to question two. All right, so question two, explain the tax treatment for overtime, allowance, and payment bonus, right? So for overtime allowance, basically, okay, let me read what's here. But in the normal distance for overtime allowance, right? If the person is a qualifying junior employee, right? When you say someone is a qualifying junior employee, someone who earns less than 18,000 Ghana cedis in the whole year, right? Then with that person, his overtime, if he gets if his overtime is more than 50, is up to 50% of his basic salary, right? He's going to be charged a final tax of 5%. But if it is more than, then the first charge up to 50%, the 5% final tax. And then the leftover is going to be charged at 10% final tax. But if in case the overtime is to other employees who are not like qualifying junior employees, then it is going to be what? A personal tax rate, the graduated tax rate, right? So an example here, let me bring a small example here. Let me just write something here. Let's see something. So let's say you earn like 60,000. Let's say you earn 6,000 in the whole year, right? And then you get an overtime of, let's say, 500, right? If you want to find a percentage of this, then it is going to be 500 over 6,000. So see, the system is the base salary times 100. You are going to get you are going to get 8%. So the 8.33% is what? It's less than the 50%, right? So since it is less than the 50%, then this 500 cedi is going to be charged at a 5%, overtime rate or tax rate, which we are going to get, I think, 25. And this is final. So once this is charged, you are not going to add this back to your chargeable income. It is charged already, so it is gone. But in case you receive a salary of, this is even tutorials, and I'm bringing you questions. I'm supposed to solve the question sheet. But in case you are, let's say, you get this an overtime of, let's say, 4,000. Let's calculate the 4,000. So 4,000 all over this, we are going to get, we are going to get 66. .6%, right? So first, what you are going to do is you are going to charge up to the 50% the distance. So up to 50% of uh the 2,000, the 4,000 is going to give us 2,000, right? So this is still overtime. So we are going to get uh the excess above. So the 50% of this is what? Sorry, it is rather the 6,000. So 50% of the system is 3,000. So that 3,000 will be charged at a flat rate of what? 5%, right? And this one we are going to get something around uh 150. Then the rest, that is the 1,000, going to be charged at a rate of 10%. And you are going to get 100 here. Then here will give us 250. So these are all final taxes, and then it will still not appear in your chargeable income. But in case you receive an annual salary of, let's say, let's say 20,000, then they are not a qualifying junior employee, right? So with that one, anything, your overtime, if you get any overtime of, let's say, 3,000, this 3,000 will still be added to your chargeable income, or it wouldn't be taxed differently. It will still be added to your chargeable income straight away, right? And for the bonus too, the bonus is also similar to the first for is just like what I just did for the overtime, right? So what happens here is that for the bonus, it is 15%. So if you get something like, uh, let's say you are paid for this one, it doesn't have any qualifying junior employer whatsoever. Everyone. So if, let's say, you are paid 10,000, and then your bonus is like, let's say 1,400, then you are having around 14%, right? So that 1,400 will be taxed at 5%. 1,400 and 5%. And that will be what? A final tax, right? But if in case it is more than, let's say, instead of 1,400, it is rather around, 1,600. Then you have 16%. So the first 1,005 will be taxed, the first 1,500 will be taxed at the 5%. right? Which is the first 15% will be taxed at 5%. The first 15% will be taxed at 5%. And then the 1% that is left, right, will be added back. So it will be left with 1,000. That 1,000 will be added back to your chargeable income, and then it will be what? Tax based on the graduated tax rate. You get it? So we will solve some examples and then we solve some examples. We'll solve questions in here and then we get it. I'm just trying to do another. So where an employer makes a payment for overtime work. I'm just trying to explain it now so that I won't explain it later down there because there are a lot of questions that were asking the same thing again. So where an overtime makes a payment for overtime work, where an employer makes a payment for overtime work to a qualifying junior employee during a year of assessment, the payment is up to 50% of the basic salary of the employee for the month. The employer is required to withhold tax at the rate of 5% from the payment, right? Any excess amount above 50% is taxed at 10%, right? So that's what I just explained. So it's also here. It's here, right? So first, up to 50% is for tax at 5%. And then when it is more than 50%, it is taxed at what, 10%. But if the person is not a qualifying junior employee, then the overtime is added back, the money is added back to his chargeable income so that the normal personal tax rate will be applied on it. Right? So that's the same thing. A junior employee is the one whose annual salary does not exceed 18,000 Ghana cedis. That's what I explained. So for bonus too, I also explain bonus. Where an employee pay a bonus to where an employer pay a bonus to an employee during a year of assessment, and the sum of the payment during the year one does not exceed 15% of the annual basic salary, the employer is required to withhold tax for the gross amount of the payment at the rate of 5%. So if it is up to what, 15%, then the tax rate is what, 5% final. You will not add it back again. But if it exceeds, then what you are going to do is the employee shall add any excess above the 15% to the employee, to the employment income of the employee for that year. Right? So that is a bonus in excess of 15%. That's what I just displayed. If in case it is what, 1,600, then the 1,500 will be what, taxed at the 5%. And then the 1,000 that will be left will now be added to your chargeable income. So, B. Mami Ejiwa is a junior staff member of KD Limited. Her monthly basic salary is 8,000. She was paid an overtime allowance totaling 1,000 during the month of January. In the month of February 2021, Mami Ejiwa was paid overtime allowance totaling 5,000. We could compute a tax liability on overtime for the month of January 2021. So now, what you are going to do is what you are going to withhold tax from the payment in accordance with the income tax rates for residents. That's the graduated tax rate. So the tax withheld under overtime and bonus. Oh, okay, sorry. So that's what I just explained, that the tax withheld under the overtime and bonus is a final tax on the overtime or bonus payment, and the payment shall not be included in calculating income derived by the employee for that employment, right? So that's what I just explained, that you are not going to, the one that you withhold tax on it, you're not going to add it back to the chargeable income, right? So that's basically it. So now let's look at Mamiya Joy's listing. So for January 1st, his salary was what, 8,000, and then he received an overtime of what, 1,000. So this is it. 1,000 over the 8,000, right? Times 100 is going to give us 12.5%, which is less than 50%. So basically, we are going to only tax it at 5%, then the final withholding tax of 5 cedis, right? So I is saying that compute a tax liability on the overtime allowance payment for the month of February 2021. So in the month of February 2021, she was paid 500. Now let's check the percentage. The percentage here is now 62.5%. The percentage here is 62.5%. Now, what are we going to do? We are only going to take the first 50% and charge it at the 5% tax rate, and then the rest will be what, added back to our graduated tax. So okay, no, this is overtime. So overtime, what we are going to do is uh, we are going to tax the first one, the first 50% at 5%, and then the second 50% at 10%, right? Overtime. So since I thought it's a bonus. So now that's the first 50% of the eight, giving us of the 4,000 here at what, 5%, and we are getting 20 Ghana cedi. Now the excess, which is left with what, the 500 minus 400, giving us what, 100, and then times the percentage is what, 10%, giving us what, 10 Ghana cedi. In total, the withholding tax here is going to be 30. So that's the same thing. This is what we are doing. It's just the slide now. See, it is nothing extraordinary. Now, let's move to C. Bawa is a junior staff member of Blinks Limited. Her monthly salary is 2,000. She was paid an overtime allowance totaling 500 during the month of February 2021. Here they're asking us, what is the tax implication of the overtime allowance? All right, so yeah, although Bawa is a junior staff member, she's not a qualifying junior staff because her monthly basic salary is more than 18,000. So we can check that by multiplying either the 2,000 by 12. So the annual distance 2,000 by 12 is going to give us 24,000. Or we can divide uh, 18,000 by 12, and then we are going to get 1,500. Right. So you can see that's why he's not a qualifying engineer member. So if when you multiply his basic salary 2,000 by 12, you are going to get more than 18,000. Therefore, his entire amount of overtime shall be considered as part of the taxable income. So we are going to add the overtime 500 to his 2,000 to make it for the taxable income or the chargeable income for that year. Right, that's why the entire amount of tax will be at the graduated tax rate. And let's move to Ines Danso. Ines Danso works with GD Limited and earns an annual basic salary of 50,000. She was paid a bonus of 6,000 in 2021. Here, because okay, this one quite bonus. Bonus doesn't care about qualifying this. So for bonus, we are going to what, tax the first 15% at what, 5% uh tax, final tax, but the rest will be what, added back to our chargeable income. So that's the same thing here. So bonus as a percentage of the basic salary. When we check, it is 12%, right? So 6,000, 5,000, 60,000 or 50,000. Okay, so it is So the annual bonus paid is less than 15%. Therefore, the bonus is what? Uh, 6,000 will be taxed at 5%. That's all. So we tax it, and then our final withholding tax is what? 3,000. Please, pardon me that something I look to be talking by her sometimes because by the time 121 following this, my breath. Yeah. If I don't record it tomorrow, I won't get how to do this. Now, look at this one too. Visa. Okay. Visa works with K, the bars on bars, earns an annual basic salary of 14,000. He was paid a bonus of 45,000 in 2021. Determine the tax liability. So now let's check the bonus. 45,000 by the 140,000 times 120 years, 32.14%. Right. So basically, this is clear that it is more than what the 15%. So bonus is more than 15%. Basic salary, therefore, part of the bonus is more than 15% of the annual basic salary. Therefore, part of the bonus will be taxed at 5%, and the excess will be taxed at the graduated tax rate. Right. So we are only going to tax the 15% of it. So 15% of the 14,000 is what? 21,000. Right. So we are going to tax that 21,000 at 5%. That's the final one. Now the difference will be added back to our taxable income. So the difference between 21,000 and 45,000 is what? 24,000. So this 24,000 will be added back to our taxable income, right? So I think that's all. Let's move to question 3 quickly. So question 3 is a bit broad. Yamutu was employed by Yazo Company Limited on 1st January 2016 and on an annual basic salary of 400,000 by 40,000. As we know already, I've explained that 400,000 by 40,000 means that it is going by 40, 40, 40 each and every year to 560,000. She was paid a bonus of 240,000 in 2019. Now they are telling us to determine the tax on bonus and the total liability of Yamutu in 2019. This one, I don't even need to explain, you can do it, right? So once you check the bonus, and then you see that the bonus is what more than 15%. That is the normal 15%. That was the normal the 5% tax rate. And then the excess one will be what? Tax at the graduated or will be added back to our personal income. So now let's determine the basic salary. Our basic salary, so here they've only told us about the bonus, right? We only know about the bonus. So now let's determine the pay or the basic salary. Now, she was paid this on in the year 2019. So let's determine it. So 1st June, with this basis period, 1st June 2016 to 31st May 2017 will be the 4,000. Right. Now, 1st June 2017 to 31st May 2018 is what? 440. It has grown by 40,000. Now, 1st June 2018 to 31st May 2019, it has grown by 8,000 now. Then 1st June 2019 to 31st May 2020, it has grown towards 520,000. So we will have like it is in the year 2019, right? So we are going to get 5 months in here, which is from 1st January 2019 to 31st May 2019. In this 480,000, right? So we find that one, and then it will be left with 7 months. 7 months, so 7 over 12 times this 520,000. When we add the two of them, this is what we are going to get 503,333. First one is giving us 200, and second one is giving us this. When we add, this is what we are going to get. So now we can either check by doing 240,000 over 503,000 times 100, then we get a percentage. Or we can also find the 15% of this. 15% of this is basically 75,500, right? Now the bonus payment is what? 240,000. So we are going to take the 15% from it and then get our normal this, and that is going to be added back to our chargeable income. So it's still the same move. I just that here they've subtracted the amount from it. That's all. You find 15% of the basic salary, you subtract it from your basic payment, then you get uh the amount that you're going to send to your chargeable income, or you're going to add back to your chargeable income. That's it. So now if you want to determine our tax liability, basic salary is this. Now the 15% excess is this. Essence of that one is this. So when we add everything, this is what we are going to get. Now we are going to use the graduated tax rate to do this. The graduated tax rate as at the year 2020, right? Just in this the tutorials. The 2020, okay, was 2019 or so. I don't have it in 2019. Right, so I think we are not having 2019. 2019 is different. So now, for the 2019 graduated tax rate, right? The first 1,200 is taxed at 0. Then the second 420 is taxed at 5%. That's what we get. The next 1,104 is taxed at 10%. This is what we get. The next 23,190 is taxed at 17.5%. This is what we get. So the next 642,413.33 is taxed at 25%, and this is what we get. Right. So with this, we are going to add all the taxes from people, and then we get this as a tax. Someone is going to pay 164,794 as tax, right? So that's it for that side. And then now remember that we've calculated tax, withholding tax already. And the question is asking us to determine the total tax liability. The total tax liability is going to be the personal tax rate plus the withholding tax that we calculated on the 15% threshold. So when we add it to this, our total tax that we are going to pay for that year. Let's move on to the rest. The next one. B. Elom and Aram entered into a partnership on 1st January 2018 to produce hair products. They agreed to share profits and losses equally after charging annual salaries of this and this. Interest on capital of 5% per annum was deducted from the profit. Depreciation deducted from the profit for the various year of assessments are 80,000, 60,000, and then 180,000. Capital contributed by the partners are as follows: 100,000 and 80,000. To enable the partnership introduce a new product, they invited Elinam to join the partnership on 1st January 2019. Elinam was to receive a salary of 6,000 annually, in addition to an equal share of profit. He will not be entitled to interest on his capital of 60 million. Elon was elected as a member of parliament for Boli consistency and resigned as a partner at the close of the day of 30th June 2020. The remaining partners continued to share profits equally. Operational profits for or loss for the partnership are as follows. So 2018, this is the profit they made. 2019, this is the loss they made. And then 2020, this is the profit they are making. So capital allowance was 60,000. And then Elon received a rent income of 10,000. So we are required to calculate the chargeable income of Elon, Aram, and then Elinam for 2018, 2019, and then 2020 year of assessing. So first of all, we have to what? Compute the adjusted chargeable income. Why am I saying so? As far as depreciation and other unallowable expenses was in there, then we are supposed to adjust everything again. So uh, interest on capital was deducted from the profit, which is not allowable, and also depreciation was also what deducted from the profit, which is not allowable. So what we are going to do, we are going to add depreciation and interest all back again. So we add them back, depreciation and interest on capital, we add all of them back. And then they also took the salaries from the profit. So we add all of them back. Then we less capital allowance. That's the only allowable deductions here. So that's why we are seeing add depreciation, add interest on loan, add salaries, and then less capital allowance. Then this is what we are getting for the adjusted profits for 2018, for 2019, and for 2020. Just doing the same process and the same step, right? All right. So now let's now talk about the share of profit. So the share of profit is going to be this. For 2018, it was only Elon and then Aram. So they were what? Sharing profit equally. They were sharing profit equally, profit and losses equally. So the profits that we had here will be divided into two, and then we will share it among them. So when we divide it, this is what we are going to get for them. Then now we come and then because we subtracted their interest on capital in the income statement, we are now bringing it here, right? Then we also bring the salary here, and this is their total chargeable income. So this is what tax man is going to tax. Now we do the same thing too for the year 2019. We divide their losses among the three of them because in the year 2019, they what? Invited or they made someone join. So for that particular year, that loss will be what? Shared among all of them. So everything was shared. Interest on capital came here, 4,000, and then 5,000 because Elena will not be what entitled to any interest on capital. That's what we are seeing here. Well, Elena didn't get any interest on capital, right? So, all right. So, uh, that's it for the year 2019. Let's move on to 2020. Remember that 2020, Elon was elected, so he left the business at 30th June, right? So that's what we are going to. So in the year 2020, the adjusted chargeable income here was this. was this, right? So what we are going to do is we are only going to divide it into two because we want to know when the woman was leaving, the profit that was found. So he left at June, which is in the middle of the year. So we divide this amount by two and then share it among the three of them, right? So you divide the 1,031,620,000 by two. Then you share it among them. So now, here is it here. So when we divide it and share it among them, when we divide it by two and then we share it among them, this is what they are going to get, right? Then interest on capital, everything is now divided by two here. Here is supposed to be 5,000, but because it is in the middle of the month, it has changed to what? 2,500. It Yes, it has changed to 2.5 million. Here is supposed to be 10,000. And because it is in the middle of the month, it has changed to what? 1,000. Sorry, 5 million. Then this one too is supposed to be 14,000, but because it is in the middle of the month. So everything, because in the middle of the month, has been divided into two here. This one too is supposed to be 6,000, but in the middle of the month, that's why it is what? Sorry, it's supposed to be 6 million. But because in the middle of the month, it's what? 3 million. Right. So now we add everything up, and then now the share of profit at getting to the first 6 months and then the second 6 months is among only two partners, which is this and this. So the remaining that was left here, when we divided this by two, we shared half among the three, and then the rest will be shared among the two. So that's what we are having here. We add its interest on capital because it is in the half year, we divide it by two. It's supposed to be 4 million, but because it is half, we divide it by two. Then salaries too, we divide it by two like that. And this one too is divided. Right. So that's it up to this point. Now, when we add everything, we are going to get this for this, and this for this. Just imagine if I was solving everything here online. If we do with BI, right? So if you have any question, you can drop it in the comment section, then we move on. All right, so the chargeable income for 2018, 2019, 2020 is this. All right, so let's go to question 4. Question 4. Aboti has been employed at Asempa Limited since 1st August 2019 as a finance manager on a salary scale of this 32,000 by 8,000. Right. So the following, if you know how to do the first question, you should also know how to do this. If you really understood the first question, you should be able to do this. So he has this, all these allowances here, responsibility allowance, utility, all these allowances here, right? Now, there are a whole lot. I can't read all. Tired already. So now let's try to calculate the chargeable income for the 2021 year of assessment. That's the same thing we are going to do here. Now let's complete the basic salary. The basic salary will fall between the basic period of this and then this, right? Because it's the year 2021 and he was employed on 1st August, right? So 1st August 2022, 31st July 2021, we are going to get 7 months in there. So 40,000. At that time now, scan it to 40,000. So 40,000 times 7 over 12, we are going to get this. Then this one will be left with 5. 5 over 12 times this, we are going to get this. When we add all of them, this is what we get. Now we bring in all our responsibility allowance. We bring in all other cash allowances, utility responsibility risk allowance. So we do that, and then this is what we end up getting. Remember, these are all on the basic salary, right? So we had a basic salary of this. We had a basic salary of this, right? And then the responsibility allowance is on the basic salary. I'm reminding you that in this part, this wasn't monthly. So sometimes question will state clearly that monthly. So with that one, you are going to multiply by 12. But here, there was nothing like monthly. So we assume it is annually. So now 18% of the basic salary, you get this, then wait for the rest. Utility, risk allowance, and everything. This is what we are getting. This is what we are getting. Now, when we add them, we add it to our basic salary, we are going to get 66,300. Now we add other cash benefits, which we have the leave allowances, medical allowances, meal allowances, and those kind of stuff. We add all of them here. Leave allowance, medical allowance, meal allowance. The meal allowance was monthly. The one that is per month, you bring it in. The one that is in per annum, you also bring that one in. So then you also have house helps here that are being paid. So you have two house helps on 500 wages per month each. The amount is paid to Abuchi in cash directly by the company. So he has been, that's what they pay the house help 500 Ghana cedi per month. So we are going to multiply by 12 and they have two. That's why we are bringing the 2 here. This is what we get. Then the bonus to is being paid 25% annual basic salary bonus, right? Remember, anything above 15% is what added back to the chargeable income. So we find a difference here, and we are getting what 25 minus 15% times the distance, and we are getting this, or it can be 10%. You can just do 10% times this, and you're going to get the same thing. Because 25% minus 15% is going to give you 10%. And the overtime too is here. We have an annual overtime of what 18,000. I bring it here because he is not a qualifying junior employee. So since he's not a qualifying junior employee, we bring the overtime here straight. And then there's what an unaccountable entertainment allowance. We also bring that one to here. We get this what we get as total, we add it, and then this what we get. We add it to the audit, and this what we get. Now we come in and solve for our indirect cash payment. We have the 11% here. They are saying that the special retirement package by a way of provident fund, which he contribute 9% of his basic salary, while the company contributes 11%. So it's what an indirect cash payment. You bring it here. Then the social security fund here, I've been telling you it's always 13%, and you're supposed to bring it. The question will never tell you. Sometimes will not tell you, sometimes will tell you. You always have to remember, right? So now we are getting this here. Then when we add everything, this is where we arrive at. Now, by adding this to this, we are going to get our total cash employment or emolument of 126,833. And we add other non-cash benefits, right? The non-cash benefits is the accommodation, which is what 10%. and we are getting this. But remember that in the question, they are saying that they pay he pays 400 Ghana cedi. Pays 400 Ghana cedi per month spent. Um, he pays 400 Ghana cedi per month as spent, right? So we are going to multiply by 12, then we less it from the normal accommodation distance. Here's what we get. Then the car too is what? Fueled, right? Since the car is fueled, where is the car? All right, so he has been provided with a vehicle with driver and fuel. Rate is what? Having 12.5%, but it still has what? A restricted amount if in case this thing exceeds this. So if it exceeds the 7,200, we use that one instead, right? Now, there is also some kind of loan benefits. So for the loan benefits, in the slides, we were told that the Bank of Ghana or the statutory would be having their interest rates, and then the firm will also be having its interest rates. So if in case uh, you are just a worker through the firm, and the firm decides to give you some kind of loan and at a lower rate, what you are going to do here is that you are going to pay tax on it since the rate is lower than the normal statutory interest rates, right? So what will happen is that the statutory interest is for 25%. You find 25% of it, and then you also find 15%, which is it is what the distance is saying. So where is it for? All right. So on 1st January 2021, he was given a car loan of 20,000 to purchase. And the simple interest, what they gave him was what? 25%. But the Bank of Ghana rate is what? 20. They gave him 15%. Bank of Ghana rate is what at 25%. So it's either you can do 25 minus 15 times the 20,000, right? Or you can just do 25,000 times 25% times 8,000, you get it. Then 15% 2 times 20,000, you do it, you get it. Then you subtract them and then get the taxable benefit, right? So when you get a taxable benefit, what you are going to do is you have to divide it by 4. The Commissioner General will be taking quarter of that particular benefit. So after calculating, we had 2,000 here. Then Commissioner General will be taking what? Quarter of it. So divided by 4, are going to get to 500. When we add everything, we are going to get 15,000 here. And then now when we sum up everything, the qualifying employment income is going to 142,416. Now, we less deductions. So Provident Fund, the 19% that was contributed on his behalf, the employers 11%, Social Security Fund 5.5%, employees 13%, marriage responsibility relief 12,000, child education 18,000, age dependence They are 2. So 2 times 10. Sorry, 2 times 1,000. 2,000. When we add everything, we are coming here, right? Then when we subtract from the first figure, because the thing is less, when we subtract, then we are going to get this. Now, we can add other income. Directors, he received a director's fee of 24,450. That was a net, meaning that we have to bring in the gross, because here in the question, he received, so, and the net of taxes. So they've taken uh, a withholding tax on it again. So we have withholding tax on accounts. So that is what has been happening. That is what has happened. They've taken this one, so we have to convert it back to the normal. If you want to convert it back to the normal, it is the amount 24,450 divided by because initially it's supposed to be 100%, and 20% has been taken out. The law says that when a director's fee is charged at 8%, a 20%, sorry. So they've taken the 20%, that's why it is left with this. So if we want to convert it back, it is going to be this. So 24450 divided by 0.8, we're going to get the actual real figure before that tax was taken out. When we add everything, we are going to get our chargeable income. Let's quickly run to question 5. Question 5 too is the same thing. It's the same loan benefits that we've spoken about. Remember that the loan benefits, if your loan is going to take more than 12 months, then there's a loan benefit, right? As far as it is going to be more than 12 months, there's a low benefit. I explained this in a slide. So you can look through, you can look at these answers. I've explained everything to Pepe. I've explained this. If you have any question, you can drop it in the comment section in the menu point. So, see, question 6 is also here. These are all like repetitions of what we've done so far. For question 6, HA Limited. State the principles underpinning the computation of overtime. I've explained this already. Right? We don't need to re-explain. Overtime and then bonus. I've explained this already. Right? So we can look at state how overtime is computed in the month of this one. For example, we've done similar one already. You can look at the answer here. Don't see all the rest, they are all similar. It's just that part-time teaching, for example, invigilation, supervising. So these are all self-explanatory. I've really explained them here. You can just pause the video and then look at it well. I don't know why some people will just come into my DM and send me the solutions for the way. See if I'll send it. I won't send it to and a casual workers to an overtime to bonus payment. I've explained everything. You can pause and then go through. Then question 7. It's also the same. Question 7 looks bulky, right? But it's still the same as what we've been doing. We can look through the answers. That's why. But it is still the same process that we've been going through. The interpreter was paid with a tax on account, a withholding tax on account. So they need to convert everything back. That's why they converted everything back here. So click an image. So these are all some self-explanatory notes you can go through. Payments, this one to question 8 to question 8. You can take a screenshot of this. These are self-explanatory answers. I'll explain this in the slides. I know my eyes are not even opening. The treatment of lessor. The lessor shall, so this one, and in ascertaining the income for the year of assessment, the lessor, okay, so here, in a lease, one party grants the other the right to use real estate or other property in exchange for money. So whatsoever. What they are saying is that with reference to income tax, outline the income tax treatment for the lessor and the lessee. So for the lessor shall include the whole amount, the whole of the amount of the interest and repayment of the capital for that year as income in respect of the lease asset. So that's it. The person is going, the lessor who the person giving out the machine is going to include the whole amount, which is the interest and then the principal payment. And it's not entitled to capital allowance, and then may reduce the amount of repayment of capital included in income by the capital amount, right? So here, what this basically means is that the lessor is going to recognize everything in his account, but the lessor is not going to be granted capital allowance, right? But for the lessee is only going to record the principal payment each and every year, but we ignore the lease. And then the lessee is going to charge 10% on the it's 20%. It's going to charge the 20% or the percentage of that particular pool of assets on the principal payment. So if the principal payment is 70,000, we're going to charge 70,000 as the capital allowance. Then when you subtract, the difference is going to be a written number. Then let's say you add the capital allowance, new one to it again, 70,000 to the written number again. Then you charge the capital allowance again, then you subtract, you get written number, you do the same thing. That's what is being done here. So I think this one's explained almost everything in the slides. You can go through this. Then, yeah. So I'm super tired. I think this is where I will end this. And maybe this morning, yeah, when I wake up, I'll record session 5. Let's see, tutorial set 5, then we'll move on. Thank you very much for your time. Please, if you not like this video, can you like this for me, okay? Just push the video for me. Thank you very much for your time. See ya. Bye.